Good afternoon, everybody. Welcome. Oh, welcome to the stream. Sunday, I love it. Um, what a week we've had, huh? We still got a war going on. We got a jobs report. We've got we got so much that happened in the last week. A lot of volatility. We've seen markets rise. We've seen markets fall, mostly fall. more emphasis on the fall part. Um, we've seen go easy, go down. We've it's just been a fun week. It's been a very fun week for sure. What's next week going to hold? We're going to talk all about that. We're talking about everything today. Um, Before we get too deep though, I want to very quickly bring up I need to bring up the other slide first. Let me just pull up the other screen. Bang, boom. There we go. Oh, and I'm gonna switch over to here. I'm gonna switch over to here so that when I bang it in here, you're not watching that Candace black hole that keeps going forever and ever. Blossom. So this, by the way, this here is the back end of Blossom. This here is the Ambassador Games. So we're playing the Ambassador Games over there in Blossom, and basically, whoever signs up the most in their category is gonna get a prize. Well, right now I am Blue Whale, so I've gotten 6 downloads so far in March. Not you know what? I think a lot of you guys are already on Blossom, to be honest. But right now, Green Owl is leading with 18. I want to give them a run for their money. So guys, if you have not yet signed up for Blossom, now's the time. Now is the time. Let me just I'm going to drop the Blossom thing in here, get the Nightbot to bring that up. So what exactly is Blossom? Blossom is a social media app built for investors. Here we are. So, and is this my homepage? I think it is. So yeah, basically it's kind of like, I don't want to call it anything like Twitter or X. It's got a life of its own. It's basically investors from all over North America. Well, heck, internationally now. Nice is on here. Nice is on. I saw Nice followed me the other day. I followed Nice right back. But here's the beautiful thing. Now, guys, once you sign up for Blossom, and I'll show you some of the features that it has here in a bit, but once you sign up, the most important thing to do is to follow me. It's not so I can get a bunch of followers. It's because I go through my followers. That's where I look for, well, that's where I read my content. Instead of the main screen, I go through here. And the reason I go through here, look at there's 2 more followers. That's just, I'd rather, if I'm going to read somebody's stuff over there, I'd rather, instead of it being a random person, I'd rather be one of you guys. So I will go through here and look, there's Dave. Dave, you sure do post a lot. I don't know if you're here right now, Dave, but you guys know Dave. Dave posts a lot for sure. So anyway, I like to go through here and see exactly who we got and what you guys are up to. And if you really want me to see something that you're throwing up on Blossom, put a thing on it, like here, this here, at Mountain Finance, because then it ends up over here on my mention page, and I'll go and I'll go check it out right away. I don't actually, I kind of like it, to be honest. So yeah, this is Blossom. It's a lot of fun over there, guys. Come on over. There's a lot of things that you can do at Blossom. Obviously, you can talk about stuff, but here's the beautiful thing. So if you are looking like this person here, they put in, okay, this is the Shadow of Ezra. They didn't do it correctly, but if you actually link your asset, just see if I can find somebody with a linked asset. Somebody's got to have a linked asset here. You'd think maybe I should rehearse this or something, guys. All right, I don't see. Oh, here's one, SPY. It's a US one, but if you click on it, it'll actually bring up that individual stock. So when somebody mentions something like SPY, you can pull it up and you can see exactly what it is. In this case here, the SPDR S&P 500 ETF Trust. And it'll give you a little bit on the financials, some of the sector weightings. That to me is really important part. This is an easy way to find out, if you're looking at that ETF, like heck, let's actually do it with something that we're all more familiar with. Let's just go into this here's the 0 to 100K challenge. I do keep it up here. Let's go into, let's see, well, it has to be an ETF. Obviously an ETF that's mixed, a mixed ETF. Do I not have? Yes, I do. All right, here's HHIS. You know what? HHIC. Let's go into HHIC. All right. And so in here, you can scroll down and does it? Oh, it doesn't. Where is it? Doesn't have it. Yeah, I really should rehearse these guys, but it's not showing. But you are getting a whole bunch of information with it. Play around on it. I still consider myself a newbie on this one because, it's got a lot of stuff. I think it probably does a lot of stuff that I'm not even aware it does right now. But I do like playing around in here. I like to see what we got. And I think part of the reason is that I went into this through my portfolio. I think if I had picked on this from an actual text, it might have brought up a different view. I'm not 100% sure. But nonetheless, what a start to the show. What a start to the show. At least I'm sharing the screen. I'm going to give you guys that. All right, let's go back to Big Me for the moment. And let me see here. Let's hit the chat. Let's hit the chat. We don't have a market to look at today, so we'll get right into the chat. We'll see what you guys are doing. Lance, first one in. Good afternoon, everyone. Prairie, good afternoon, community. Happy Sunday to everyone. Oh, that reminds me, guys. Friday, Wealthsimple had their coin. You got to scratch your ticket. Now, I did it live on the air, and I lost. And everybody in the chat pretty much lost. But if any of you missed that show and happened to win, let me know in the chat. Because, like I said, one of my goals with that contest is I really wanted somebody in the community to win. And so far, it's not looking good. It's not looking good at all. All right, Scott says, good afternoon. And good afternoon. My internet is being a flaky internet. Right now, it seems to have slowed down. It was actually snowing. It was actually snow. I'm like, come on, guys. We're halfway through March. It's time for the snow to dial back a little bit. All right, Bismarcky in the house with a happy Sunday all. And we've got Kelly with happy Sunday and Samantha with good afternoon all. Whew. Bleak is present and accounted for. Speaking of Nice, good afternoon. Kiev and Cass saying, hiya gang, happy Sunday. King of Day, a bit late, technically difficult. Happy Sunday, a beautiful weather here in Calgary. Nice. And here you go. Guys, King of Day loves Blossom. If King of Day loves Blossom, Blossom rocks. Niece, sorry you didn't get the point for me signing up. Oh, gosh, that sucks. Oh, well, at least you're there. At least you're there. That's the important thing. So if you want to make a post, I can check it out. Let's see. Dave's not here. I know. Where's Dave? Dave probably is. He's probably golf. I don't know. I'm gonna say golfing, but I think Dave lives in Kingston, so probably not golf weather yet. And he said had some problems at first. Yeah, and it might be being in Sweden might be part of it because I don't know if they've really started rolling it out internationally yet, other than North America. So you might be the first. You might be the first person in Sweden who is in Blossom, and that's kind of cool. All right, Luke says, happy Sunday, everyone. And Mary is in the house, guys. Mary is our official captain of the like button. So, guys, I know we just started, but let's hit that like button if you didn't do it on the way in. Now's the time to do it. I'm going to take a quick, I'll refresh the test box. We'll see where we're at. Oh, so good. Oh, that's so good. All right. Whew, I also get to have a bit of coffee when Mary comes in, so I like it. We're sitting at 24 out of 64. That's less than half of you have hit that like button. So, guys, hit the like button. Let's get it. Well, I want it to 70 before the end of the show. So let's at least for now, let's get it to 40 and we'll go from there. All right, Luke says, with the market right now, I feel like it's the start of a big roller coaster ride when you slowly climb to the top and grip the safety bar, anticipating a crazy ride, including big drops. Oh boy. Yeah, what's the best way to call it? We're in that type of market where one of the first things that I think is going to happen. So when you're looking at a volatility, when you're looking at a war, panic selling becomes really easy. And that's kind of that whole situation with that roller coaster. You feel like you're going to go down, and people will sometimes, when it starts to go down, people will sometimes panic sell because they'll be kind of like not seeing the fact that at the bottom, it turns around and goes right back up. People will miss that. So people will panic sell. So obviously, yeah, it's not something that you want to do. This war will end, and there will, the market will rebound on the other side. There might be some damage to the economy after the end of it, depending on how bad it gets. But for the most part, yeah, it will bounce back. And, we will be on that upstroke again. And right now, it might just be a whole bunch of little volatility spikes up and down for a little bit. Like, I still think, and I called March as a green month already. I know we're only halfway through, or sorry, a green month, a red month. I called it as a red month. So yeah, we're only halfway through. But I'm pretty sure we're finishing in the red this month. In fact, I even said if we somehow get back to the green, my first stream in April 1st maybe, I think it is, I'll be wearing my green Santa hat. It'll be embarrassing. It might even be warm. I doubt it'll be warm, but I'll do it. But I'm pretty confident that I'm not going to have to. Unfortunately. So what can I say? All right. Ooh, and I see something here. Wahipple is in with a gifted Mountain Finance membership. A psychic ghost. I love that name. A psychic ghost has won a Mountain Finance membership, and we already have a show tomorrow, but the Goat Squad, you can't hold them down. You can't keep a good goat down. Here is our evil Monopoly goat just in here to say, hi, where's the dice? It's my turn to roll. All right. Now, thank you very much, Wahipple. I appreciate that big time. All right, now, I was here. Niece says, because I am Swedish and you only have 2 markets, I could not share more than my Canadian companies on Blossom. Yeah, that would definitely be a limitation because I don't think they have other markets. Other than Canada and the US, I don't think they have the other markets set up. But nonetheless, it's still cool. It's still pretty cool. Zenio says, should I stay in cash for possibly numerous buying opportunities for weeks and months? Gary Gill thinks tech will be cheap until at least October. Good old Gary Gill. It's hard to say what's going to happen, but right now, I think there's going to be a lot of buying opportunities until this war is over. And, Donald Trump said that it would be about a month. Obviously, we're heading into week 3, and I don't think it's going to be a month. I mean, I just don't think he has, I think he thinks things are going to things tend to go his way a lot of times, more or less, that's the way it goes. Or if it doesn't go his way, he just keeps going like it is going his way, and eventually it does. But I think in this case, I think Iran is annoyed. I think Iran is very, very annoyed. And I think he keeps poking him. I think he keeps poking the bear. And I think this will end up being a little bit longer than he anticipates. And it really depends. Like if he brings the Marines in to try to take control of, of the Hormuz Strait, oh boy, that could get messy. I think it could get very messy, but you never know. Sometimes you just never know. But I'm saying messiness. I'm thinking messiness. All right, Stan says hello all. And Kira says, good afternoon, everybody. Luke says, wow, 22 likes already. Oh, come on, Luke, 22. Now I want to look. I asked for 40. Maybe we're there. I don't know. We'll find out. The test box is reloading. 37. You guys are very good at almost getting there. I love it. Lisa says, hi, everyone. All right. Rob says, Candace, because the jobs report can send the stock up or down, and with AI getting strong each day, where do you see the stock market going? All right. So, yeah, let's talk a little bit about the jobs report, first of all. So the jobs report wasn't very good. 84,000 jobs gone, just gone. In fact, it's actually worse than that. It's 100,000 full-time jobs gone. We added some part-times to sort of buffer that a little bit. But yeah, it is, it's not good. It's not good. So it's actually kind of interesting. We got two things happening. So when you look at the Bank of Canada, one of the things the Bank of Canada does with those interest rates, and we do have the Bank of Canada interest rate decision coming up this Wednesday, but one of the goals is they use that as part of their toolkit to try to keep inflation under control. So right now, because of what is happening with the oil, right now Brent is still over $100 a barrel. We're going to be looking at a lot of oil inflation. And you guys can already see it. If you guys go to, any of you who drive, which is probably most of you, look at the price of gas. That price is going up. And it's not just you guys paying that extra money. It's all the truckers, all of the shipping companies. Now the airlines, like apparently the price of aviation fuel since the beginning of this conflict, I heard the other day somebody quoted 58%. I have not verified that quote though, but that's a quote that I did hear. So things are going to go up. There's going to be inflation. So typically, what does the Bank of Canada do when there's inflation? They raise rates to try to make it so you don't spend. Well, honestly, you don't need to raise rates to get us to stop spending. I think a lot of people have already done that. But that's typically what they would do. Now, the other side, and there's been whispers. Like I have heard whispers amongst the economists about rate hikes later this year or sooner this year. People starting to talk about, well, they're going to have to start hiking the rates to deal with that inflation from the oil. And, that's a concern. That's definitely a concern. People are a little bit afraid about that. However, this is the one saving grace of this jobs report. Even though this job report absolutely sucks, it's going to guarantee that we're not going to see a rate hike on Wednesday. It is that second part. The it's a reflection of the economy in peril, an economy that's suffering. And that's going to be what weighs off some of that inflation. So I think, at least for now, this jobs report, and maybe the next one, the next one is actually expected to be better. But this jobs report for now is certainly keeping things at a pause. So we should not get any movement on the Bank of Canada overnight rate on Wednesday, of course, thanks to that. So what does that mean for the market in this coming week? Well, obviously, as much as I'd like to say that's going to have a big impact on the market and that, that'll get priced in, sure, it'll get priced in. Sure, it'll have an impact. Will it be a big impact? No. No, it won't. The big impact is going to be whatever happens with this war, whatever happens with oil. That's where I think the bigger drivers are going to be. Like right now, I'm not worried about tech. And when I say I'm not worried about tech, I'm talking about the whole AI concern that we had before this war. That's pretty much taken a backseat. And, in fact, tech has had some pretty good days since then. So it's going to be very interesting to see how this unravels. So this coming week, I think this coming week would be a little bit less volatile than last week, provided we don't get any crazy escalations in the war. And that's the thing. We're in a situation where it's a new black swan can pop up at any moment. They're just flapping their wings here and there. They're flying all over the place. Well, one could fly into the market. It could easily happen. I'm hoping it doesn't. I'd like to see a sane week. I'd like to see a little bit of less volatility. I do think Monday will probably, at the very least, start green. It may go red. It may go red depending on what happens. But so far, and part of the reason I think it's going to start green is that, we had some momentum down, but we've actually had a pretty mild weekend in the war. Other than I think the only big thing, and this kind of happened on Friday anyway, so we already know about it, was that whole island thing. There's an island in the Strait that basically Iran uses it for processing oil. And, Donald Trump hit the island. They told him not to. They said that would be a bad thing for you to do. He's hit it. He hasn't hit the oil infrastructure on it yet, but he has threatened to. So, or maybe if he has, I haven't heard about it yet. So I always want to sort of backstep on that because there's a lot of stuff going on. And what's really interesting is we're seeing a filtered version of the war because a lot of the press, they're not allowed to report a lot of the stuff. Like there's a lot, and it's understandable. Like, I mean, if you're in Iran or in one of the countries around Iran, obviously, if you broadcast exactly where bombs are hitting, that could help the opposing team. So you kind of can't do a lot of that. So, we're kind of I think we're getting things filtered a little bit. And I don't mean as in, not like propaganda, lied to us type filtered. I think it's more or less, we have to let a little bit of time pass before we can really talk about this operation or that operation. So, and that's fine. That's fine. I don't mind that. And I certainly understand the logistics behind it, and it makes sense. All right. Whew. Anyway, tangent finished. Samantha says, I got the joke. I did not. Did Scott actually tell a joke? Oh, no. See, I need to have a goat for when someone tells a joke, but I completely miss it. Let's see. Good afternoon. My internet is being flaky. How is that a joke? Oh my gosh, I don't get the joke at all. Oh boy. Yeah, I don't get it. Scott says, I figured someone would. All right. We need a goat in a jet for Scott's jokes that zoom over. Yeah, that's exactly what I just said. We need to have a joke for a goat for if Scott has a joke that falls flat or goes over everybody's head. Yeah, that's what I'm thinking. All right. Wahipple, hey everyone, got my butt off the sofa to hit like. Nice. Niece, Trump thought he could just do a hit and run war. I think so. I think he sort of thought that people would just roll over very quickly for him, and that just hasn't happened. Rob, Brookfield is down at an RSI of 25.78 right now. Perfect buying opportunity. Yeah, Brookfield is down a little bit. Let's actually take a look at Brookfield. All right. Brookfield, BN. Here we go. Brookfield Corporation. And just pull up a. So yeah, they had a great year. Just lately, I do like this level that they're at right now. Like there's support at this level. There's a lot of support actually. I mean, if you look at just even in here, you can sort of get a general idea. If we go out to the 3-year, you can see this is kind of where that support is. Now, the next level of support's way down here, but they're not going to drop down that far. I think that they are going to probably turn around at about this level. So yeah, I do like Brookfield Corporation. All right. Feralius. There we go. Feralius. I got it. Wartime. Is it a DCA period? Not a bad strategy. Not a bad strategy at all. That's the thing. You just got to be a little careful. I know a lot of people right now are, well, one thing a lot of people are doing is trying to ride the oil wave. There's nothing wrong with being bullish on oil, but you want to be a little careful. You want to be a little careful because, we don't know how high this is going to go. And when this turns around, oil's going to come down. That's the reality of it. So, and I think oil's going to be very volatile in here. So I would be careful playing oil. Now, one of the things that I do like, though, is when it comes to Canadian oil. So right now, there's always been a bit of a discount on WCS, and that's pretty cool. But the actual amount of that discount has been getting lower. So WCS is slowly getting closer to to WTI, so to West Texas Intermediate. And as that discount narrows, that's actually really good for Canadian oil companies. So we could see some movement in the Canadian oil companies, and that would be kind of cool. I like that. CNQ would certainly benefit big time. You know, CNQ, Suncor, Torlamine, all of our big oil companies for sure. Let's see. Scott says, I hope the market will be wearing green for St. Patrick's Day. Me too, Scott. That's it. Let's get our shamrocks on and have a green day on the 17th, which is that's Tuesday. So there we go. Tuesday, automatically, it has to be a green day. You know what? If we have a market close on Tuesday, we'll figure that out tomorrow. But if we have a market close on Tuesday, no matter what the market does, I should just have I'll have a green sign. My sign will be green no matter what. No matter what. And Lance says, I think some big dips coming this week. Well, you see, I'm hoping you're wrong. I kind of, and I don't mind big dips because it's good buying opportunities. But I'd like to see the market just calm down a little bit this coming week. But you could be right. I don't like that you could be right, but you could be right. Rory's in the house with an afternoon, and Paul has joined us. Good afternoon. Just hit like for number. Oh, you were the 37. There we go. Actually, since that happened, let me just refresh this. I'm curious. We got to be above the 40 by now. Let's see here. I'm sure we are. Yeah, 45. So, guys, let's push it. Let's push it to. You know what? Let's just go. We'll go baby steps. Let's go to 55. All right. Paul, when will people realize there is no AI bubble? I think people like the word bubble. It's almost like no matter what's happening in the world of investing, there's always a bubble of some sort. Everybody's like, oh, this is in a bubble, that's in a bubble. There have been bubbles, but yeah, you're right. I don't think AI is a bubble, not in a traditional sense. I do think there will be companies that have, that will probably sort of fizzle away. And we're already starting to see it, I think, a lot too. Like, so with the fear that we had before the war, the fear not of war, but the fear of AI, I think some of those little companies, especially some of the ones that don't have that much value and they're just sort of utilizing the word AI in their titles and such, I think a few of them actually did suffer a little bit. I wish I had a list of some of those. All right, Chad says, I hope the Bank of Canada raises rates. The T-Cash will get a boost. Well, that's true. I don't think you're going to see rates, though, raise, at least not this time around, Chad. Luke says, Ed Yardini, renowned analysis, seems confident that a 15% correction is coming to the S&P soon. He isn't usually so bearish. There's always a possibility. I mean, there's always a possibility. And obviously, if we go into a recession, and more importantly, a bear market, I think from the investing perspective, could we get a 15% correction? Sure, we could. Well, the last time it was technically a correction. You could call it a correction going into a bear market. Yeah, that could happen. It could. Now, will it happen though? I don't think anybody knows. Even Ed, I don't think Ed knows. Ed may believe it's going to happen, or may even be confident that it's going to happen. But, if we all knew we were going into a 15% correction, we'd be moving everything to cash, wouldn't we? Nobody will know, unfortunately. All right, Prairie says, FYI, for those invested, Northwest Healthcare REIT, so NWH, officially rebranded as Vital Infrastructure Property Trust, VITL.UN. Really? I missed this, Prairie. I want to see the new ticker. So VITL. Oh, I like it. Vital. Yeah, Vital Infrastructure. Here we are, right here. Let's take a look here. Convertible unsecured subordinate debentures. Oh boy, I may not be. Oh, I went into the wrong one. Let's try the VITL, just UN. Here we go. And this is, I was like looking, what, $100? What's going on here? So here we are. This is the regular.UN, Vital Infrastructure Property Trust. All right, yeah, and I'm looking here, and they had been moving in the right direction. Then, yeah, we've had a little bit of a correction here. REITs have been, REITs have just been so, I don't know what the word is, disappointing for the most part. Now there have been some industrial REITs that have been doing okay. I still like my RMAX, even though it didn't live up to expectations. I still like it. All right. Rory says, especially if you have a large reserve in GICs. All right. Curious on your thoughts on Amazon right now. My thoughts on Amazon. I mean, I like Amazon. I think Amazon is fine. I think they'll be fine on the other side of all of this as well. And now, actually, I want to go. I actually want to do this in here. Do I have an Amazon? No, I don't. I don't have Amazon at the moment. Let's bring them back. There we go. Now we got a fresh Amazon right here. Holy banana bread. Let's let's collapse Amazon a little bit here. All right. Whoops. Where am I? Oh, I know what happened. I had to go back in time for something. All right. So yeah, well, this is Amazon right now. So Amazon, I'm pretty happy with what they've been doing, and in fact, it looks to me like they're getting ready to break up or down right now, because I'm just taking a look here, and just a quick little, we could go that way, but I wouldn't. I would actually play it off of here. So yeah, there is a possibility. Like, it looks like Amazon is getting ready to break out of the current pattern. Will they go up? Will they go down? Always a good question. If we have a calm, half-decent week, they're probably going to break to the upside, which would be great, because if they did, let me just give you a general idea here. They could break up, up here to like 218. That would be kind of nice to see. I'll leave that there. We'll see if it does it. But yeah, overall, I do like Amazon. Right now, Amazon they pretty much got a monopoly when it comes to people buying stuff online. I buy a lot of stuff off of Amazon, and I don't think any of that's going to change. I think Amazon is going to, I think they're going to continue doing that. Even if we go into a recession, it might get to a point where people buy a few less things, but for the most part, I think a lot of people are just going to do it, because, especially, imagine if we go into a recession now, and you got gas really expensive. I'd rather just get things delivered by Amazon at that point. But how is that going to impact the Amazon business model? So free delivery. Obviously, if gas goes way up, they're going to have to pay more for delivery. So what'll probably happen is, I imagine a lot of it will get baked into their price. So, and this is the thing, a lot of people look at Amazon, they say, oh, free delivery, how can they be making money? And, the reality is, whatever the seller is making. So if the seller is, providing, a big jar of goop for $5, well, Amazon is probably selling it for $6. So, there's always going to be a spread in there. So there's always ways that they're going to make money, for sure. All right. Paul says, when the price of gas and diesel goes up, price of goods and services will go up. Isn't that how 2007, 2008 happened with price of oil going up? Well, no, that was a little bit of a different situation. So yeah, the 2008, that was the financial crisis. And a lot of that was just the way they were bundling loans. So they were taking bad loans, that had bad credit ratings on them. So like, I'm not going to get into AAA and things like that, but they were basically taking loans, really risky loans, bundling them in with some good loans and repackaging it to make it look like it was a nice sturdy product. And they had been doing this for years and years and years. So it got to a point that they built this massive financial house of cards, and it was kind of relying on bad loans to keep it propped up. And when those bad loans started doing what bad loans do, failing, it basically caused the whole thing to come crumbling down, per se. That's kind of the whole thing. Now, I don't know, I do not know if oil helped, if it played a role on the side. It might have. I mean, oil sometimes impacts things, but for the most part, it was all about the loans. It was all about bundling the bad loans in with good loans and creating new financial instruments that were not prepared to withstand anything. Here's Chad saying, yeah, 2008 was the housing crisis default on USA mortgages, subprime lending, like go easy. There we go. Roku says, happy flash snow squall. Yeah, exactly. That's what I said. It was snowing. Roku says, no, Paul, it's not a bubble. Roku asked. It says it's not a full bubble yet. What will Trump say next? If I had to predict right now, what is Trump's next word? Okay, let's play that game. Well, it's Sunday. Where would Trump be on a Sunday? Probably on a golf course. All right, I'm going to predict Trump's next word is for. It's a prediction. It might be, I don't know. I thought I would play with that. It's kind of fun. Prairie says, I'm of the same belief that the rate will be held. Yeah, I think it'll definitely be held. Rory says, if it goes up 25 basis points, if at all, I don't think they're going to do it. I think, though, if the jobs report hadn't been so bad, there would have been a chance. I think there would have been a chance of it going up. And I don't like to say that. I don't even like to think that. Let's see. Rob wants to know, Rory, if you have a lot of GICs. And let's see, that alone would panic the TSX. Yeah, it would. There's a lot of people, I think, that would be very annoyed if the rates started going back up. Let's see, Rory says, I have 4 GICs, one is redeemable. And he says, what can save us is that 2 of the oil countries have pipelines so they can avoid the bottleneck. Right, and that's what you were saying the other day, that they have another way out of there without having to go through the Strait of Hormuz. Let's see. Dave's not here is a Cheech and Chong routine. Oh, is it? Yeah, where are you, Dave? Everybody wants to know. Rob says, what are GICs typically giving in returns? I don't think they're giving a lot. Well, it also depends on the length of time, but I don't think they're that high anymore. At one point, though, back when the rates were really high, you could get about a 5%, a little over 5% on some of I think on the shorter term ones. All right. Kelly says, all that war coverage is crazy filtered. I spent half the weekend counting Netanyahu's 6 fingers on one hand and trying to figure out if they're covering up his death. Oh, you mean the new supreme leader? So yeah, I don't know. Who knows? I mean, that's the thing. Let's see. Rory says Cheech and Chong's next movie and Up in Smoke are friggin' hilarious. And you know what's funny, Rory? I have not actually seen a Cheech and Chong movie. I've not seen one. All right. Prairie says reports have come out that Iran hit a Canadian base at the beginning of the month, which was kept secret until it got reported by international media. Yes, I did hear about that. So, but at the same time, even though that happened, no Canadians were harmed in the bombing of that base. So that's good. That's good news for sure. But yeah, I know both sides. I think the NDP and the Conservatives were raking the Liberals over the coals over that one. And I mean, let's be transparent, right? There's no need to cover anything up. All right. Rory says, I got in when they were at 6%. Now they're 2.5 to 3%, waiting for them to go up again. All right, awesome. And Luke says, I've been accumulating Brookfield Corporation heavily all week, even sold my Torlamine to buy more. Okay, interesting play, but not a bad play. I mean, there's going to become a point, especially as, as oil goes up, I would not be afraid to take profits because you're in a situation where oil's going to go up, other things are going down. So if you take some profits from the oil and put it into some of the things that are down, that's not a bad move. It's not a bad move at all. All right, and guys, we got a line jumper, as in we got a super chat. We got a super chat. So John Gotti in with a $5 super chat. When do we stop blaming Trump? 90% of goods enter the U.S. tariff-free. You can't replace the U.S. market. This middle power is an illusion. So when you look at, so even right now with tariffs, we're not really getting hit that hard because a lot of goods are covered by CUSMA. So anything covered by CUSMA, and that of course being the free trade agreement that we have with the United States, there's no tariffs on any of that stuff, and that works in both directions. So yeah, that is definitely good. Now, we got the renegotiation of CUSMA coming up in July, and we'll have to see how that goes. Right now, I think it's too early. Like, there's going to be posturing on both sides. So yes, will Trump threaten to maybe tear up CUSMA? Of course he's going to. That's a negotiation tactic. Will he actually do it? Well, that's another question altogether. I actually don't think he will. I honestly don't think Trump will tear up CUSMA. Like, I think there'll be negotiations. Now, obviously, one of the big hurdles right now between Canada and the United States is the dairy farming. Trump really does not like some of the stipulations, some of the tariffs that can potentially be levied against U.S. dairy. Now, mind you, you do have to hit a particular quota before you get there. But I think he just wants that to go away. Now, the problem here is, and this is where the government's hands are kind of tied, private members bill. So the Bloc Québécois, they put through a bill that was last year that basically removed it as a bargain. Basically, the bill stated that we couldn't use dairy as a bargaining chip for any of the trade negotiations. Now, here's the thing, and I do not know the answer to this, guys. Does that bill only preclude us from using it as a bargaining chip in regards to tariffs? Because otherwise, maybe there's a workaround and maybe we could negotiate using it when it comes to CUSMA. But I don't know. That I don't know. I don't know the specifics of that bill. So, but yeah, John is right. So, are we, is it a big thing to blame Trump? I always look at it this way. I don't care. I'm kind of at this point that right now, yeah, these tariffs are not hurting us that much. Are they hurting us some? Yeah, not. Well, and let me be clear. The blanket tariffs are not hurting us. The ones that are painful, obviously, are some of the sectorial ones. So when you look at the tariffs on steel and aluminum, that's absolutely decimating our car manufacturers. And also, cans. Kind of an interesting thing because in the past, a lot of, if you take aluminum, so for tin cans, so a lot of our what are we going to call them? Beverage manufacturers, we would buy our own aluminum and then we would send it to the U.S. to have them made into cans for us and shipped back. But now because of the tariffs, all of a sudden, we got a whole bunch of extra costs being thrown on these cans just because we're letting, we're putting our aluminum down to the United States so that we can get those manufactured, and then we're getting hit. Even though it's Canadian aluminum, we're still getting hit with it with tariffs, and that means that they have to sell the cans back to us at a higher price because they have to pay the tariffs on that aluminum as it comes into the United States. So yeah, it is. I mean, it's an interesting thing. It's an interesting thing for sure. All right. Oh, and I went straight into the super chat. By the way, John, thank you for that super chat. And guys, that is also a goatable offense, a goatable movement. That does bring up our Bay Street goat. That is our second goat of the stream. So thank you once again. All right. Now, let's see where we were. All right. I believe I was at Rory. Let's see. I know someone in Dubai that says, don't believe everything Fox News or CNN or the BCC is saying. Okay. All right. Interesting. Now, is that all they said? Did they give you any idea? Yeah. And not to sound like a ground news commercial, but it's one of the reasons I like to try to go to as many news sources as I can, just to sort of get a clearer picture. But even on this one here, I think there's a lot of filtering. There's a lot of filtering on this war for sure. Rob says, seize the opportunity I see with GICs. And Rory says it's a safe play, but have to invest as well in the TSX or the S&P. King of Day, I missed the bingo results. How did it go? It ended, yeah, Scott mentioned it. It ended in a tie. I could not believe it. So we were trying to get a bingo. And quite literally, guys, we came down to one last prediction that you guys made. And if that prediction got it, it was a bingo. If it didn't, then no bingo. And it ended up being BlackBerry as the last one. And when we looked it up, it actually it came in at 0.00. So it's like, what? How could it be 0.00? What were the odds of that? It was actually very funny. Now, a beautiful thing though, King of Day, we are bringing bingo back. So basically, on the first Sunday of every month, we're going to do a bingo. We'll do that on the weekend show. We'll review it then on the first live stream we have of the week. So probably Monday in most cases. So we'll be doing that, and if we can get a bingo, we'll use that to add another show. We'll add a show with that bingo. But yeah, anyway, we're going to do that pretty soon. Like it's almost, half a month and we'll do another bingo. All right. Marina says, hello, everyone. You're right, Candace. We get filtered war coverage. Reading news in 4 languages shows totally different perspectives. Very humbling. Nice. All right. Okay. Now I have to ask Marina, what are your 4 languages? And I'm gonna take a guess. I'm gonna be absolutely wrong, but obviously English is one. Well, we live in Canada, so maybe French. I'm gonna say Spanish, and I'm gonna say German. Why not? Everybody, I think that's my go-to when I'm trying to guess. Anyway, that's if you want to share. You don't have to share if you don't want to, Marina. But that's my guess. All right, Lance says, I think the real correction has yet to come, at least for the S&P 500. I don't know how much TSX and S&P can differ, but I think we have some more good buying opportunities before new all-time highs. It also depends. Like if the market gets more wobbly in the States, you got to realize too what can happen. And we've seen a bit of that this year. Actually, we've seen a lot of it recently. If we get people moving to gold, so as a safe haven, that can certainly help inflate at least our material sector a little bit. And that could help buffer a little bit of that fall. So, in the next bear market, if we have a bear market in both the S&P 500 and the TSX, I kind of think the S&P might go down deeper. I kind of think they will, but we'll have to see. I hope it's not this year. I don't want to deal, I don't want to do a bear market right now. Even though we need one, I still don't want to do one at this moment. Nice says, if the markets have a correction, it means cheaper investments as long as we choose stable companies. Yeah, exactly. Lily is in the house. Let's see. Hello. Looking to invest in emerging markets. What are your thoughts on EMCL? Oh, let's go take a look. All right. Here we go. All right, so here we go. This is your global hex, global X, enhanced MSCE emerging markets. And, oh, I did not grab the right one. I did not grab the right one here. Let me just pull this up right here. Perfect. Okay, now, if we take a look here, now they haven't been out that long. Yeah, it's slightly more than a year, but anyway. Nonetheless, emerging markets, I think, are pretty strong. Now, you got to realize one country that's included in emerging markets is India. India, they're doing fantastic. They've got the fastest growing economy in the world right now. It's not the largest economy, but it's the fastest growing. And this, to me, that's really big. And India has been they've been doing a lot of infrastructure spending, because one of the things that India is trying to gear themselves up to be is kind of be like the new China. So you know how China makes all these cheap stuff? Well, India wants to do that instead. And India now, last year, they passed China. So India now has the most number of people in the world. So they're bigger than China when it comes to population, believe it or not. I never thought anybody would beat China, but India has. And they've got the people to do a lot of stuff. And they're trying to get a lot of business. Like they got Apple. Apple has moved some of their manufacturing to India. There's a lot of other companies sort of looking at the same thing. Oh, funny little Apple story, guys. Now that we brought up Apple, April 1st. And this is not a joke. It is the 50th anniversary of Apple. So Apple started as a company back on April 1st, 1976. So there's a lot of anticipation that there could be some really neat announcements. It's kind of funny. These new laptops that they announced, the Neos, they announced these this week. I don't know why they didn't hold that off. They should have held that off and brought it as part, because they're kind of cool. They're very cheap, entry-level Macs. Like these are laptops that, at least US-wise, I think $500-600 you can get them for. $500 if you use the student discount. And I'll tell you something, guys. Here's a secret to being a Mac owner. If you're ever going to buy one online and have it shipped to you from Apple, there's a place you can go in and you can basically say you're a student. They don't check. You don't have to send any kind of verification. At least you never had to, as far as I know. But a lot of times you can just go in, say you're a student, and they'll give you a bit of a discount. So just something to keep in mind. All right. Luke says, I made a bad call with Propel Holdings. Bought too soon. Their clients are not the white-collar workers who are losing jobs to AI. They are being dragged down by go easy headlines. That might be too. I know that, I'd gotten into a swing trade with Propel Holding just before that down. I managed to get out of it, but I'm a little worried about that whole sector right now. Like, I'm not worried about the banks, but some of these smaller lenders, they're not as resilient as the banking system for sure. Let's see. Luke says Propel has a healthy balance sheet and has been transparent with their loan provisions and charge-offs. Yeah, like I think they will be fine. On the other side, they'll survive this. Go Easy's probably going to survive it too, unfortunately. I'm not a fan of Go Easy, but all right. Lance says, speaking of bingo, guess where I am watching from? A bingo hall, maybe. All right, let's see. And Kelly says, please reassure me that the predictions of a 2008-like crash due to the private credit crisis won't affect us here in Canada. I can reassure you, but I'm not going to say that. I think it's a completely different beast. So right now, with the private credit crisis, it's not even remotely as big as 2008. Some people will like to exaggerate it a little bit and, doom and gloom. So I'm not super concerned about it. Will there be any issues or fallout from it? There could be, but it won't be anything like 2008. And I don't think it'll spill over as much to Canada. So yeah, I wouldn't be super worried. I wouldn't be super worried as long as as your investments are in fundamentally sound companies, you'll be fine, for sure. All right, let's see here. Lisa says our local credit union is offering a 6-month HISA promotion, high interest savings account, for 4.6%. I think I'm going to transfer some cash over. I wish rates would go up. Sorry, not sorry. All right, fair enough. That's not a bad deal. 4.6%, lock it in. Especially if we're in a the only thing I don't like about that is if you lock it in and you get some really good deals on the market, then it's like, no, I can't buy. But yeah, 4.6, that's not bad. That's not bad for 6 months. Lance says, I think when private credit in U.S. crashes, it will have a minor effect on Canada and also short-lived. With the sectors that are currently in rotation, I think Canada's time is around the corner. I think Canada's going to be fine. So, but I do agree that if we had a big crash in private lending in the U.S., the rollover in Canada wouldn't be that big. All right, let's see. Tom says hoping for some green this week to dump Tesla and IVN. Surprisingly, how far IVN has. Yeah, I know. IVN is just. It's one of these ones that I'm going to have to do some step down trades on. So IVN, and guys, take a look at this. Let's just take a look and we'll go over to the swings. IVN is just, and it's kind of interesting, like in a way, like they were in, for the longest time, they were in this down, a descending channel, and they're almost kind of setting up another one. So this could be interesting. In fact, let me grab a couple lines here. I'm just going to take a look here and see what we got. We could have this could be another descending column. Now, if that's the case, I'm going to watch this like a hawk on Monday because if it's going to come back up. So if we're going to get some movement, and here, I'm just going to grab the pen. If we're going to get movement up like this and then back down, that's a pretty good step trade. That's a pretty good step trade to sort of reduce my adjusted cost base on this. So I'm going to pay attention to see what this does. Now, speaking of predictions, we were trying to see if we had a channel. Now, this one here, we've got a couple of hits. That's what I like about this. Like, we have some hits, so I'm a little more confident in this channel. Now, we looked at the potential of Bitcoin moving into a channel. And as I said, we really needed some hits. I showed where the channel would be if it would happen. And, whoops, I'm drawing. Here, let's just get over here. So, whoops, I did not mean to do that. There we go. Let's delete that. I'm going to delete these extra drawings. All right, perfect. So yeah, and this is kind of what we were looking at, that there was that potential. Now, this channel's not dead, but it is sloppy. Like if it came down here, it sort of hugged the bottom and it's moving back up. So it could be an interesting potential channel, but right now, I think I still would want a bit more clear pattern, a bit more of a clear move with Bitcoin. It's definitely, I will definitely say this channel here has finished its role. This channel is now done. It did exactly what we expected in this channel. It's, and it even broke out to exactly where we expected. Well, not exactly. It went a little tiny bit higher. But now it's kind of moving in this slop. This here is what I call slop. Like you can't play slop. So I need, for me, I need to see a couple more moves. And then I'll play, I'll even play MSTE. I don't mind. I'll play whatever. I wouldn't mind, making a little bit of money off of Bitcoin right now, but we'll see what it does. Kelly says, I keep buying it as it falls. So yeah, that's one method. So when you buy, of course, you do lower that adjusted cost base. But you also want to I always say, be a little careful with that strategy, because next thing you know, you could get into a situation where if it's down for a while, you may have accidentally tied up half of your trading money into it, and then you're like, oh, I don't have much money to trade anything else. So then you get in that situation where it's like, well, I'm just going to take the loss so I can start trading again. So you want to be a little careful with that, but if you're not into it big and you want to average down, then that's definitely a good thing. All right, Doorpat says, happy Sunday, everyone. Lance says, steel tariffs have absolutely hurt us. We lost a lot of our customers temporarily. We went from super busy and not working enough overtime to keep up to running at 30 to 40% capacity with no OT. Ah, boy. And Prairie says, beverage producers should go back to glass bottles. As a kid, I loved finding them and returning them for the change. Oh, and it's environmentally more friendly. Well, as a kid, Prairie, I used to go door to door. I would just go door to door and just say, hey, do you have any empty pop bottles that you don't want? You'd be amazed how many people would give you. Like, you go, by the, by the end of it, you're carrying all of these big bags, plastic, back then it was Sobeys bags, all filled with pop bottles as you carry them down to the store, and they, you sell them back to the store, and then you buy a bunch of chocolate. Let's face it, kids, chocolate, candy, all of that fun stuff. Chad says Saskatchewan has Scar Can and all bottle cans are refundable. Nice, yeah. Let's see, Manitoba has recycling, but no refund program except for beer bottles. All right, and Vic is in the house. Hey, Vic, how are you? All right, Rory, yep, I hope cans will go to 15 cents instead of 10. I look at them like a dividend. Yeah, why not? All right, let's see here. Marina says oil futures at 100, 100 per barrel. May contracts factoring Hormuz blockade risks, freight insurance, spot legs, $80 per barrel. Shortages start next week as pre-blockade tankers arrive. Yeah, and even right now, if we look at oil, let's come back over here. There we go. I don't know if this is updating right now, but actually it's not, I can tell. Right now, though, the last we had on Brent was 103 and WTI at 96. But by the end of this stream, this should start updating because they turn these prices back on here towards the end of the stream. Chad says, yep, free tax money on bottle and cans. There we go. The Epic Coder. In 50 years, should I focus on income or growth? All right. So you have 50. So yeah, it's kind of that interesting thing. So obviously, when you first start investing, your focus needs to be on growth. You want to grow your money. You want to compound. You want that full compounding effect. So, yeah, there's some people that like income investing when they're younger. I personally probably wouldn't do it only because I don't think, not that I think it's bad, it's only because I can get bigger total returns. So for me, total returns is going to be everything. Now, as you start getting closer to retirement, and this is an interesting thing, Epic, if you're planning to retire at 55 or if you're planning to retire at 65 or maybe 70, I don't know. But at that point, it's time to start looking at your portfolio. And I think when you're in your 50s, that's a good time, if you haven't already, to start looking at more of a growth income portfolio. So your growth income portfolio, that's your hybrid. So, you've still got some good growth going and you are still, you're starting to bring some of that income in, but you're not doing that at the sacrifice of growth. You're kind of looking at funds, things like HDIV, for example. HDIV gives you a half decent income, and you're still getting a good amount of growth because a lot of their covered calls, they're out of the money, so meaning that they are giving room for a bit of upside. Also, a couple of the two of the ETFs that HDIV holds doesn't even have covered calls on them, so you're getting full upside on those. So things like that. And it doesn't mean that you can't have like a pure income. Like, for example, if you want Utes, sure, add it. But, what I always say is in a portfolio like that is that if I'm going to have something like Utes, I'm also going to have something that has growth in it. So I might just hold Utes, and then I might hold something like XEG. So XEG being the iShares TSX S&P 500 capped, sorry, not S&P 500, just S&P, TSX S&P capped energy index. I might hold that as a way of just sort of balancing things out. And that way there, once I am ready to retire, like I would say in my last year of retirement, pre-retirement, then I'm going to be shifting things a bit. I'm going to start looking at, first of all, I'm going to look at for exit strategies. And this is kind of that thing. So, if you're in that transition period, and this is one of the reasons why there should be a transition period, is that, on the day that you retire, if you're going to okay, I'm just going to sell all my growth stuff, put it into income. What if the market's down? What if you're in a bear market? Then, it gets a little bit harder. It gets a little bit harder. So the way I like to do it is, is as you're getting closer to it, you start moving into a more, as I said, a dividend, a growth income portfolio. That way there, you still have a good amount of income starting to build. And as you get closer, you maybe shift it more towards that income so that when you do hit retirement, you may already have all of your income in place. And that's fantastic. And, there's nothing wrong with that. And if it's all in your TFSA, it's all nice and tax-free. That's kind of the good thing, because tax-free is really, really good. And that's kind of what you want to do, because you don't want, depending on what your supports, like you can actually have, here's a beautiful thing. If you don't have a lot of supports, so, let's say you've got your, you don't have a huge, let's just say, for example, with your CPP, let's say you decide to defer it because you're like, oh, you know what? I'm going to defer that because it's going to be bigger. So I don't want to have to deal with that right away. And you might, if you only have OAS and you're deferring your CPP, you might be able to qualify for the GI, the GIS, the guaranteed income supplement. So you might be able to get a nice income coming from both of those. And then if you've got your TFSA geared to be pumping out income, that's all free income coming out. That is not going to, it's not going to hit you tax-wise. It's not going to hit you with your GIS or anything like that. So you can get a good amount coming. Now, if you take that strategy and you did have a good CPP, once you do start to pull from your CPP, at that point, you're probably, because your CPP, if you defer it, it gets bigger. You could get to a point where you would end up losing that GIS in your later years. However, here's the good news. The good news is when you look at the average amount of money that seniors spend, they spend a lot more on average, between 65 and 75 than after 75. So in that sense, if you lost the GIS because all of a sudden you're getting a half decent CPP down the road, you're going to be fine. You'll absolutely be fine with that. All right. Whew. Now it's time to have another sip of coffee. And here we go. Yeah, Chad says both. Yeah, exactly. All right. Vic says, agree with Chad, but if you have money, more income. But if you have only some income, you need growth. All right. Yeah, King of Day. Apple's April Fool's Day. I know. It's hilarious. All right. Larry says, I picked up UAE, United Arab Emirates ETF. Really? I've never looked at that, Larry. I've never looked at that. Let's just take a quick gander. Sure, why not? UAE. Here we go. iShares, but obviously you're looking at the US one here. Do I have the US one here? Yeah, right here. It is. Never mind. It is here, right here. iShares MSCE UAE capped ETF. Interesting. I have to take a look. All right. So yeah, all right. Very interesting. And they're down right now too. So all right, I can see the play. On the other side of the war, they're probably going back up. That's probably going to be an interesting ETF for sure. All right. NVIDIA is seeing AMD as a real challenger now since their latest and greatest chip is equivalent to NVIDIA. Because of that and the fact that AMD is always priced competitively, AMD share price will rise. Gosh, Rob. Interestingly enough, Rob, the next video, so Tuesday's video, is actually, it's got some AMD in it and it's got some Broadcom in it, so you might like it. Yeah, AMD I think is I think they're really, really good. Now, here's the thing. I think they can work together. And I think they both think they can work together too, because I believe, oh gosh, I believe I read something about AMD, I think there's a deal that the two of them have. I can't remember the exact terms of it, though. All right. Bismarcky, we are all students here at Mountain Finance University. Other than you don't pay tuition, well, I guess the supers. The supers are your tuition. There you go. Rory says commodity futures should start soon. Yes. Let's see where Black Texas Teas goes tonight. If you guys remember last week it was just like it went crazy. It was up like it went up to like $118 overnight. It was pretty big. Let's see, Lance. Yes, currently playing, hoping for the big one tonight. Well, good luck. Good luck with the bingo. Let's see, the HISA isn't locked in. It's a HISA, not a GIC. Oh, sorry. There we go. All right, you're good then. You're good. Yeah, I don't know why. I was thinking GIC for some reason, but all right, perfect. Okay, here we go. I can read to varying degrees in English, Hebrew, Russian, and I only got one right. I got the English right. All right, so Hebrew, Russian, and Polish. Holy banana bread. So that's like, correct me if I'm wrong, but it's almost like three, like, because Hebrew has its own alphabet. And then I think Russia and Polish, I think those are fairly similar. And then English has its own. So it's almost like three separate alphabets in there. Oh, that's, you got my respect. You've got my respect. Pierre says, hi, Candace. What do you think of UNH? I have held it for some time, but it hasn't been doing well. So UNH, United Health. I assume that we're talking about the US one, right? I assume UNH. Let me just pull this up here. Yeah, the other one's a CDR of United Health. There we go. So United Health. Here we go. Healthcare has been through a rough ride. Like, well, let's go to the 3 years on this, and you'll see. There's been a bit of a rough. Well, actually, they weren't doing that bad up until well, about a year ago. Yeah, and there we go. So about a year ago, there's certainly been. It hasn't been great. It hasn't been great. I still like United Health. I think long term, I think they'll be fine. So if you're looking at them as a long term hold, I think you'll definitely be fine. In fact, if you're looking at them as a long term hold, this is not a bad place to dollar cost average. And maybe, I don't know where your entry point is, but if it is higher than 282, that might be a chance to sort of average it down a wee bit. But I do still like them. I still think they're going to be fine. Doorpat says, and at 40 is 100% QQC and XEQT good. So, okay, so yeah, basically you've got two things here going on. You've got, first of all, you got your all equity, and then you've got a little bit of extra into tech. Yeah, those aren't bad. Those aren't bad, and that's, this is all going to be dividend growth. Well, look at this. Let's go to XEQT for a second, because, I haven't done that yet today. Here, XEQT, there we go. And just look at it. This is the 3-year chart, and you can see, this is, this one moves in one direction. And you can say, no, Candace, look, it went down there. But overall, this one moves in one direction. So very safe when it comes to, growing. It's not exciting. It's about as exciting to watch as paint drying on the wall. Yeah, it is. But it's reliable. It's reliable, and it's so well diversified. Now, QQC, let's pull this one up. Here we go. So this one here, this is your Invesco NASDAQ 100. So once again, this is giving you access to all of the technology, and we'll do the 3-year on this. So yeah, tech, tech has hurt a little bit lately. But once again, even when you look, and let's go back here. Here's the last bear market. Even with a bear market, it still rebounds. That's kind of what it does. You remember how we started the show with Lance talking about the roller coaster? Well, here's that roller coaster ride, and what does it do on the other end? You go back up. Then, that was a big dip. I could feel that one in my stomach. It's just, that sinking feeling, just whoo. Anyway, but that happens. All right. Chad says, yeah, but HISA pays 2.38% and T-Cash pays 2.8%. You selling yourself short? All right. Let's see here. And I will always say this, guys. be wary when you're looking at cash ETFs. Be wary of the percentage that you may see on your thing. Look at how it's being calculated, because some of these ones, they might, like, you may have a higher percentage, but you may actually have a smaller dividend. And the reason that can happen is that because a lot of times the yields they're giving you is basically an average over the last 12 months. So if one of them cut but had a higher dividend for the first part of that time, their yield can appear a little bit higher. Not to say that that's the case between these two at all, because I don't know, but I'm just saying, just always double check and look at what they're paying currently at the same time. All right. Mario says, hi, what do you think about VDY ETF? It seems to be going down this last week. So VDY, I like VDY. So VDY is, of course, our Vanguard. In fact, the current video on the channel right now has VDY in it. All right. Perfect. So yeah, VDY, and let me pull up, you know what, let's go to the 3-year. Let's just go to that 3-year. They tend to move pretty fast. Now, they've got a lot of really good dividend paying Canadian companies in here. So they are a really, really good ETF. So yeah, if you want to take a look at the video currently, definitely do that. But yeah, it's VDY versus HDIV. Now, one thing I did forget to do in that video, guys, is I like to put the time frame. Because, even though I said it was, we were looking at 1 year, the date was basically March 10th market open 2025 to March 10th market open on 2026. So, because yeah, some people were like, well, I didn't get those numbers. And it's like, well, no, if you didn't use the same data, you wouldn't get those numbers, because, the market changes from day to day. That's something you always need to sort of keep in mind. It's just, I find it funny. But in that 1 year slice, those were the numbers. So, and I can't pick where my 1 year slice is, right? I just do it from wherever I am in the moment for the last year. All right. Larry says AMD, $50, $60 gang. Ah, yes. I like AMD a lot. Let's see. Lisa says, when my grandma was alive, she could read and write English, Russian, German, and Polish. Oh, there's my German right there. Awesome. Oh, that's pretty good. I can read and write English. I know a little bit of French. Maybe 1 or 2 words in Spanish. That's about it. Chad says, I buy VDY daily. And TEC, VDY, VIDY, and XEQT daily as well. Nice. TA, One Air Canada put written with a $15 strike price expiring in May. Enough premium for a full tank of gas. Do not try this anyway. So yeah, Air Canada, they'll be fine on the other side, but they, of course, have suffered with this war, and, they might, oh gosh. One of the worst things for, I guess, if you're a customer of Air Canada, one of the worst things is that with jet fuel going up in price, you can guarantee that your ticket prices are going up too. So, and there's a lot of chaos. I know my sister was apparently coming up to visit my mom recently, and that trip got canceled, not because of the price, but because they just canceled the plane. They're like, yep, and that's like just going from Houston to Halifax. So, what can I say? I was going to go to Air Canada here for a second. So here's Air Canada. Look at this, 1657. I was really hoping that this 17 mark was going to hold, but it did not. So now we're down to 1657. Can they go lower? Oh boy, they can. That's the scary part. Like, as I said, nonetheless, I still like these prices, but I might. Oh boy, yeah, this is a prime for some step down, maybe, depending on what's going to happen. I don't like it. But it is good swing trade material for sure. All right. Lisa says, not sure if you are replying to me or someone else, but the rate is 4.6 for 6 months with the HISA. So it's a promotional rate. So there we are. Yeah, a lot of times you can get some really good promotional rates. Now Chad wants to know where. Niece says, I'm thinking of getting in on the British Asian found F Hell. What is F? I've never heard of that before, Niece. Now I want to know, what is that? I know I got to go to Google for this. F Hell. F Hell. Is it a stock or an ETF? Let's just try this. First Helium. All right. Oh, okay. No, that's something else. That's F Health. First Healing. Oh, ooh, interesting. They're a penny stock though, worth about 2 to 3 cents. So that's not who we're looking at, is it? I do not know who FL is. You'll have to give me more information, Niece. Lisa says local credit union. All right, let's see. And Chad says, okay, I thought it was through Wealthsimple. My mistake. All right, cool. All right. Oh, and I've actually caught up. That means I get to have coffee when I catch up. It's a rule. Oh gosh, so good. And now, I wonder if we got to 55. I'll take a look. We'll pull it up. We'll see what we got here. Oh, we did. We got to 64. So you guys know I shut up at 70. So if we could, 6 more likes, and then I don't have to say anything else today. Well, I have to keep talking, but I don't have to say anything more about the likes. Chad says, I think Air Canada will go lower as I'm trying to swing it. We just need to, Chad, maybe you need to send out the newsletter on what you're swinging so we can all buy the opposite. I hope it's really not that bad, though. Rory says Air Canada is going to $4. I don't think they're going to $4. That would be, if Air Canada went to $4, I would be really, really concerned. I cannot see them going to $4 at all. Yikes. Yeah, $4, because that's like, that's way. No, we're still at $8. We're still scrolling down. Yeah, here we are, $4 right here. So this here is Rory's prediction, $4 right here. All right, now I need to get him back. Dragging. There we go. I don't see $4. Chad said he'll load up if they go to $4. No, actually, I wish I'll load up. There we go. I'll buy that for $1, the Canadian peso. Oh, yeah. What can I say? Would it be the IRN dollar? Yikes. He'll retire on Air Canada. Well, if it went to $4 and then just briefly and you managed to get in, oh boy, you might be able to, you might certainly be able to retire from that. Yeah. So a lot of people, one area too that people have been talking about a little bit is stagflation. So stagflation, so that's inflation plus slow growth. So if you think about it, where we're at right now, we've got inflation because of the war, and our economy is very stagnant. It's very slow. So we kind of, it's not a traditional stagflation, but we're kind of in a form of stagflation right now. So I know that there are definitely people out there who are thinking, how do I protect my portfolio in this? What can I do? It really depends on whether you think this is going to be a longer term thing. If you really, really, really are concerned and you're like, I just want to move into a sort of a stagflation shield type portfolio, in a case like this, there'd be a few things I would be looking at. Obviously, I would be looking at my material stocks. So, our gold, silver, all of that fun stuff. I would be looking at that. I would certainly, because they do tend to be a little bit of a, especially gold tends to be a little bit of a, almost like a comfort blanket for a war. Utilities. And that's another area that I would be looking at. And how many times have you guys said, oh, my Utes is the only thing in the green today? So, Yeah, utilities is another thing. Doesn't matter what happens. If we have a war, we need power. Simple as that. Consumer staples. I know that we haven't really seen that yet, but that's also another sector I think that's going to be strong if things continue to get worse because, you still need food, you still need toilet paper, all of that stuff. And then when it comes to, dividend payers, I'm looking at the balance sheets. I'm looking at if it's an ETF, I'm looking at what are they holding? Are they holding strong companies? So when we were talking earlier about VDY, yeah, they're holding the type of companies that I certainly would like. So VDY would be a good option on the growth side, HDIV on the income side. So definitely, I think that's definitely a good way to go. Um, I don't know if I would hedge. Now, some people will hedge with, and I guess if you were going to do it, if you were going to hedge, so I was thinking like if you want to hedge with an inverse ETF, I would I would say there's nothing wrong with that. I just wouldn't go with any that have leverage. So, for example, we were looking at Biddy the other day. That's one that does Bitcoin. It's an inverse Bitcoin, but it doesn't use any leverage. So you want to be careful with some of these larger ones that have 2x, 3x leverage. So you can find inverse ETFs that don't have leverage, and that to me is one way that you could certainly look at hedging. But at the same time, what probably the easiest way, and this is we brought this up earlier. Actually, one of you guys brought this up earlier. Dollar cost averaging through a bear market, through a recession, not too shabby for sure. And yeah, Chad's bringing up copper got hammered last 2 weeks. I know. And you know, will copper bounce back? Yeah, of course they will. So I'm okay. I'm okay with copper getting hammered. To be blunt, I'll just buy more. I'll buy more. I'm okay with that with copper. All right. Sturmer says, do you hold HDIV? I have 20% of my div coming from it, but I'm not sure about dripping it from now on, splitting its dividends with XEI. Yeah, I have some HDIV. I definitely have some HDIV. So I like HDIV a lot. It is a very good ETF. So yeah, if you've got 20% of your of all of your dividends coming from it, you know, you can certainly, yeah, you can instead of dripping back into HDIV, you can certainly use it. So in this case here, XEI, that's another pretty good ETF for sure. And it's also kind of, let's actually pull up XEI for a moment. I did a video a long time ago, but believe it or not, it still gets a good amount of traffic. So this here is your iShares Composite High Composite High Dividend Index ETF. Sorry. But yeah, let's take a look. Like obviously last year, I mean, the Canadian market had a pretty good year, and look at this. Absolutely, XEI did as well. I should do an updated I'll do it. I'll put up. I'm going to bring XEI into something really soon here because I do like it for sure. All right, Lance says, is there a good ETF for Canadian defense or a stock company like how US has RTX? So right now, when it comes to a Canadian ETF, SHLD right now, this is your Global X Defense Tech Index. Now, mind you, with this one, it's not holding, it's not, a lot of its bigger holdings are US. So actually, I think I have, let me just try this here. I think I have this one here. I think, or do I? Oh, I don't know what this is. I don't know what I'm about to click on. Let's just take a look. Oh no, this is Harvest High Income. Oh, this is HHIS. All right. No worries. Let's just go to Google. All right. I'm going to save this time. All right, let's go SHLD, Global X Defense. Here we go. Perfect. All right, here we go. I'm going to grab this and I'm going to bring it into, whoops, come on. There we go. Oh, I'm going to SHLD. There we go. That way there, we have it. We have it. All right, so this one here, and I just want to go to holdings. So you'll notice here, they're top holdings. So first of all, They are worldwide. So if you want to take a look right here, let's look at the geographic. So 59% of what they're holding is US, Korea, 14, Germany, 7%, Canada. Canada doesn't even make the list. Oh dear gosh, they may not hold anything from Canada. MDA should be in there. They really should hold MDA. But here are their top holdings right now. So Lockheed Martin is up there. RTX is in there. General Dynamics. There's a whole bunch, but they are worldwide. That's kind of the nice thing about them. But it is a good ETF. Now it's not Canadian defense. It's defense. So you got to keep that in mind. So I don't know of anyone right now, any ETF that does just Canadian defense, because there's not a lot. We got, what do we have that would be in a Canadian defense? MDA Space, maybe CAE. You know, those are the ones that just pop to my mind right now. But there's probably a few. And Chad is saying PNG. What is PNG? PNG. I should know this one. I know I should know this. Oh, Kraken Robotics. Okay, yeah. Kraken Robotics. I don't know if I would put that in defense, but you could justify it. And MAI. Let's take a look at MAI. MAI. Minera Alamos. What do they do? I'm pretty sure I've seen this company a couple of times, but I don't remember what they do here. North American Gold and Development Company. Okay, well, I'm not sure how that fits into defense, but anyway, yeah, Shield is probably your option right now. All right. Lance, those are not defense. Let's see. Scott says the two Utes. I like that. P&G does naval sonars and underwater surveillance batteries out of Newfoundland. Okay. Yeah, Kraken Robotics. Yeah, I can see Kraken Robotics fitting in. All right. So Henderson Far East Income. Let's take a look at that now that I got the name. It's hard to look at things that are not North American, though. That's Henderson Far East Income. There we go. HFL. There we go. Oh, it's on Yahoo Finance. Let's pull it up. The loading chart. All right. And I am going to, whoops, I do not want the tooltip. I actually want, all right, let's take a look. That's the 1 day. Let's go to the 1 year. Oh, look at this. That's actually not that bad. It's a pretty good looking chart. Yeah, that looks interesting, Nice. That looks pretty interesting. And statistics. Oh, it's got a market cap. Okay. Oh, it's an actual company. Oh, look at this. Wow, look at this. Let's take a look at a couple little things here. Not a lot of debt, so 12.17, so 12.17% total debt to equity. Let's see. The return on equity only 11.66. I'd like to see that higher, but you know, it's not bad. Their profit margin looks pretty good. 81.36%. So yeah, not too shabby. Not too shabby. We don't have any they don't give us any estimates on where they're going, but that's fine. Let's go further back. Let's go to the oh, well, here we go. Oh, they certainly had, yeah, they've been recovering since there. So this is kind of one of those things, like sometimes I'll look further back and I'll be like, all right, well, if I was going to invest in this, I would want to be able to explain that shape. Right now I can't, because obviously just brand new, but you know, yeah, pretty much since 2023 though, they've been moving in the right direction. Now there can also, and quite literally, when you do a little bit of research, you know, this whole whatever happened here, there might be a very good reason for it. I don't know what it is, but there could be. All right, Chad says, MDA space satellite stuff with huge back orders. Yeah, absolutely. And plus, MDA Space is set to get a lot of infrastructure stuff from the U.S. government, from the Canadian government. There is Mississauga and Brampton. Lance says, I will have to look into all of them after bingo. Big prize hasn't gone yet. Oh, Are you set, Lance? Are you set, though? That's what I'm asking. Chad says, great company's huge 5-year ROI. And then Nee says, CAD have lost a little to Cronin, but I think it will go back tomorrow. Hopefully. Let's see, Candace, are you familiar with NU, new bank, doing a swing on them also? I'm not very, I've never looked at new bank as far as I know, but let's take a look. NU, let's see here. New bank, there's new skin, new holdings, new med. All right, so I do not know what NU is, new bank. I can try typing in new bank, just, let's just see if something comes up here. The bank in New York, First Bank, Signature Bank. All right, yeah, so I do not know what NU is. All right, Redwater, Carney says big construction projects up north. Yes, that there should be. Oh, MAL, not MAI. Oh, okay. That'll make a difference then. There we go. Oh, right, Magellan. There we go. Yes, absolutely. All right, that explains it. I was just like, I don't know where Chad was going with MAI, but MAL makes sense. Chuck says, and I love the QQQ. Does any broker allow automatic drip of selected individual stocks without dripping all of my holdings? Wealthsimple doesn't. All me to pick and choose. Good question. I'm going to throw this back to the chat, guys. Do you know of any? I know that Wealthsimple forces it all or none. I don't even think I have it as an option at National Bank. So, guys, if you know of one, please throw it in the chat for Chuck. I don't know of one that will let you do it individually, but I think it should be. I 100% think it should be. Rory says every time Carney says this or that or signs in an MOU, big top melody plays in my head. Oh no. Let's see, not even close. Chuck, if you call Wealthsimple, they can pick and choose for you. Oh, there we go, Chuck. That, I did not know that, Chad. Nice. I like that. That's pretty cool. Huh. All right. Yeah, a lot of times too. I wonder how many things that if you just call Wealthsimple, they can do for you that they don't normally do. Sometimes it's not a bad thing. Let's see. Sturmer says, I think you can opt out of dripping from specific stocks on web broker from TD. All right, so there's another option as well, the web thing for TD. But then you're dealing, of course, with commissions. So, sometimes it's sometimes you have to pay for some convenience, unfortunately. But I like Chad's idea of just calling Wealthsimple and saying, hey, I just want to drip. I would just do it. You know how I would do it? I would just say, okay, these are the stocks I want drips on. Just call and say, these are the ones I want drips on. The rest I want to be able to manually, allocate myself. Rory, just looking at Ontario radar, all the storms marching across 40 centimeters. Uh-oh. No, that doesn't sound good. Do I don't know if I have any storms heading for me. Right now, I got a gray sky, had a snow squall earlier, but I think it's all heading south. I think it's all heading south. Maybe. Boy. Let's take a look. Let's take a look. I think we're good here. Blowing snow. Oh. Apparently I have blowing snow. How fun. Fun. When is all right. Oh, here we go. Tomorrow afternoon, we get 13 degrees and rain. So, all right, there's my joy. And then a little bit of, that's probably, I don't know. That's probably happening overnight and then into the rain. But what can I say? I'll be happy. You know what? I'd be happy with rain every day for the next 3 weeks if we could have warm temperatures. Of course, I don't know. Most people would probably disagree with me on that one. New holding, I believe. New holdings. Okay. Interesting. Kelly says, I thought you had to own a certain dollar value of a stock to drip individually. I learned that from Canadian in a T-shirt. Um, maybe, I don't know. I, right now, yeah, I've got the drip turned on right now in Wealthsimple, but that's just because that's for the affiliate codes. Whenever someone uses my affiliate code, they send, they get $25. I get $25. I just throw it into that one little account. I got drip turned on. Seeing how just because I don't really manage it, I sort of let it sit there. Speaking of that, guys, just drop this for you. If you do want to try out Wealthsimple, here is my affiliate code. So this here, if you use this, you'll get $25 when you fund your account. Also throws 25 back at the channel. So it's a win-win scenario for sure. All right, floors. What floors? Scott, this is random. I'm not sure what the floors are. Well, I know what floors are, but I mean, I don't know what your floors are. So, holy banana bread. All right. You know what I do want to see? I want to see if we finally got some movement on, whoops. Oh, I'm in my swings. Let's go to the market close list. See if we got, we got Bitcoin moving. We still got nothing on the oil, but Bitcoin's still doing its thing for sure. And oh, look, it's actually, yeah, we got a little bit of movement up here. Maybe we could get back into this little thing. We'll see. All right. Nice says, if Canada chooses the JAS Gripen as fighter jet, I believe the deal is to open manufacturing in Canada, and it will give you jobs. Yeah, that's always a good thing. Well, maybe not me, but trust me, if I tried to make a jet, you wouldn't want to fly in it. You probably wouldn't want to stand near it because it might fall apart pretty fast. Scott says, you doggos playing in the snow on the Weather Channel. Oh, yeah, doggos. What can I say? Wealthy says in Quest Trade, you have to have enough of a dividend to acquire a whole share. Oh, really? Wow. Yeah. No, Wealthsimple, it's all fractional. It's like, you could have one share and you'll get a portion. Like right now, with one of the affiliate codes when MSTE was down, I went and picked up 10 shares. So I got 10 sitting in there, but now it's like 10.4 because the first dividend came in and it just re-dripped it into it. So, after the next dividend, I might have close to 11. So that's kind of cool. TA says, I honestly like Air Canada. I've been dollar cost averaging by writing puts. It's a Canadian icon after all. I still even have my Air Miles card from the old Canadian Airlines days. Nice. Yeah, and here's the thing about Air Canada. Air Canada, there's no way that it can fail. And I say this because there's just one reason. I mean, right now it is the airline that, that sort of connects everything in the country. You could say, yeah, there's WestJet and things like that, but Air Canada is the one that the politicians use. I think mostly. I mean, maybe some of them use WestJet now. I don't know, but I don't think the government would ever let it fail, because if there were a national airline, Air Canada would kind of be as close as possible to it. Chat says, hear nothing but back things about Quest Trade. Oh, hear nothing but bad things about Quest Trade. Slow and bad customer service. Well, like I said, I've not had a good experience. Like even trying to sign up, that's as far as I got. It failed. And after, technically right now my application is still active. So I've been in the process of signing up right now for more than a year. So almost a year and 3 months. I think at February 2025, I think is when I tried to sign up. Rory, I remember when CP Air was a thing, watched them land and take off in northern BC. Oh, nice. I do not remember CP Air. USD climbed up compared to CAD. Do you think there is more reasons for USD to climb? It's hard to say. It's kind of just one of these things, like, either side, there's so many factors that can certainly influence the money, both directions. So, like I can see like right now, we actually, even though we had a volatile week, there wasn't a lot of really bad stuff popping in, and that certainly was better for the U.S. dollar. So it could be, yeah. There's a lot of factors. There's a lot of factors. I don't know if I could nail any one particular down at the moment. So interest rates, for example, like we might see some movement on both, one or both this week. So we'll have to see how that works out. Because I think the U.S. also, let's double check. I'm going to double check because I don't like to say I think. I like to know. I like to know. Reports U.S. I don't know if the U.S. earnings, something tells me that they're coming out this week here. But let me just take a look. Maybe I'm wrong. No, here it is right here. Yeah, so it's also Wednesday. I thought it was, but I was like, I'm not 100%, but yeah, there we go. So we got interest rates coming out as well for the US on Wednesday. So Wednesday's a double interest rate day. So, oh boy. This one here could actually have more of an impact on the market than ours, to be honest, because investors in the US tend to get, I don't know, they tend to get kind of uptight around the interest rate. And I think with the U.S., I don't think you're going to see a cut. So I think it's gonna hold steady in the U.S. as well. But and some investors will like it, other investors won't. I think priced in wise, I think it's priced in as a pause. So all right, let's see. Not Canadian. Let's see. Oil and USD correlated. Oil used goes up, metals go down based on my experience. So let's see. USD. Wealthsimple doesn't allow individual drips. It's all or nothing for now. I manually reinvest the dividends. That's what I would normally do. That's what I would normally do. Let's see. Quest Trade now has fractional shares, U.S. stocks. Not sure if the drip on the U.S. shares will drip fractional shares. Entire dividend reinvested as I only have 2 U.S. positions. Interesting. Yeah. Like I said, I don't know. A says, I don't think government will let Air Canada fail, but it may let its shareholders fail. Maybe. I don't know. Well, I don't know how they could both happen at the same time. Like, if they're going to prop up Air Canada, it kind of props up the shareholders too at the same time. But, Air Canada is just one of those ones that, and this is what worries me the most. I don't want to say worries me per se, but let's actually get back. We're going back. There we go. So what worries me the most is that, when, a lot of people got in at this area up in here, a lot of people got in to do a swing trade on Air Canada. What worries me is, as it continues to fall, some of those people might be like, I'm just getting out. I'm taking my losses, going and licking my wounds. That worries me because this is going to come back up. It will on the other side of all of this. I mean, yeah, it sucks that you may be stuck with a big red, a big red stock in your portfolio for a little bit, but it will come back. It will come back. Just, how long is this war? None of us know. None of us know. And I'm hoping it's not super that much longer. I'd like it to be over before the summer. But heck, I'd like it to be over before the spring, but that's not going to happen. We've only got about a week. Yeah, we got about a week until the spring. All right, let's see. Air Canada was sold off long ago by Mulrooney, though thought that was via rail. That too, in the Trans-Canada pipeline. There we go. The pipelines. So it's interesting. I mean, Carney has been over, and I think he was in. Was it Norway? I think he was in Norway today talking a little bit about a clean Canadian oil and really emphasizing that, people should be buying Canadian oil. It's kind of, my reaction to that was, well, I sure hope you're going to approve some pipelines or, at least get those rolling, even though, honestly, I mean, if everything lined up for a new pipeline tomorrow, it would probably still be a decade before there would be any kind of oil flowing. So it's not something that can happen really fast, but I'd still like to see. I'd like to see it happen. Also sold off CPR. And let's see here. I think you meant CNR, right? I think. Chuck says, is Norbit's Gambit now available in Wealthsimple? I don't think it is available yet, but I heard that they were beta, that they have it in beta at the moment. So some people have access to it, who are more or less test proj, their test group. But that usually means that we're not that far away. We're not that far away. Or CPR. So was that okay? I was like, I'm unfamiliar with CPR. Well, I mean, I know how to save someone's life with it, but CPR, so Canadian Pacific, is that like, was CP once CPR? I'm just asking this, guys, because I honestly don't know. Let's see here. Not Red Green, Fred Green. Let's see. I got invited for Norbit's Gambit, but I didn't know how to use it. All right, there we go. So here's somebody who was invited to the beta. CP Rails. So, okay, yeah. But I'm just asking, did the ticker, so the ticker now is CP, but was it once CPR? And then they just shortened it to CP. Kind of curious. I'm kind of curious. I don't know. Well, you know what? You know who would know is Google. I have no qualms. If I don't know something, I will certainly ask. Was CP's ticker once CPR? There, let's ask. Why not? There we go. Yes. So there we go. CPR at one point. All right, cool. Oh, okay. So they changed it in 2001. Now this is, of course, something that only a railroad guy would know, hence the reason Rory knows. But yeah, I understand. Like when you say CP, I guess when you say CPR, I can understand Canadian Pacific Railroad, sure. But I was thinking, as soon as you put it that way, I was thinking ticker. I was instantly in ticker mode. But there we go, guys. It was actually, the ticker was CPR back before 2001. And I did not know that before today. Now I know that. Interesting that you remember your CPR. I take the class every year, and for the life of me, I can't use it. I think if it came down to it, though, King a Day, and you actually had somebody having a heart attack or something, or a crisis in front of you, I think it would come back. I think it would come back pretty quickly. But mind you, when I used to work, worked at a tech company basically in Vancouver, I was the level 2 CP, not CPR, but first aid for the building. So basically, in a nutshell, that meant that all of the level 1s, all of the, they all reported to me, which is fine, at least in my area. And then I was also one of the only ones that was able to use defibrillators and things like that. But, I had a good amount of training. So, I think it's, and also the fact is I don't easily forget stuff like that. So, let's see, Canadian Pacific Railway. Yeah. All right, we got it. 300 of Canada's top 500 became American owned during the Mulrooney era. Good old Brian Mulrooney. Free trade came out of that. I thought free trade was a good idea. Moonlight. Hey, Candace, I'm reading that emerging markets are where we should potentially be investing next. Brazil, Bolivia, what do you think? I like emerging markets. I think having exposure to emerging markets is not a bad thing. It's one of the reasons that I really like some of the all equity, because you're getting good exposure across the board. But yeah, emerging markets is pretty good. Now, I would look at an emerging markets ETF opposed to sort of picking which country I think will do really well, because I think that that just is a better way to go. And we actually looked at one earlier in the show. I think it was the iShares one. Len says bought HHIS and HHIC last month, but NAV is going down now with this war. Should I keep or sell? I know it's hard to really say. Well, you have to, yeah, you do have to make up your own mind. But I will say this: in the 0 to 100K challenge, I added to both of those this month because I think they're going to be fine. Even on the other side of this, they'll both be fine. So I have no comps. I have no concerns. I have no concerns about this. So when you say NAV is going down, well, of course it is. The underlying assets have been struggling a little bit lately. So, you know, NAVs go down when the underlying assets fall. NAVs go up when they go up. So they do move. Like a NAV will move. It's not instantly, like it's not like the bat signal going off when the NAV goes down. It is the bat signal though. If the underlying assets are doing okay and your NAV is going down, that's a red alarm. That's a red alarm. It's like, what the heck is going on? And that's something where I have to resolve that right away because that's a danger sign. But yeah, if it's moving, if the NAV is moving in check with the underlying assets, nothing to worry about. Patricia says, still holding CP. When I started investing, it was cheaper than CN. Nice. Well, it's still cheaper than CN, but Moonlight and stock screeners are showing Chinese banks are ready for a breakout. Thoughts on this? I don't know a lot about the Chinese banks, so I don't technically have any thoughts on it. But China's been doing pretty good lately, so it's not surprising. If somebody were to say to me tomorrow, "Oh, the Chinese banks are breaking out," I'd be like, "Oh, okay." So I wouldn't be shocked. That's the best I can give you, is that I wouldn't be shocked. All right, Rory, Hunter Harrison had something to do with CN prices. Okay, and let's see here. Moonlight, I sold HHIS because I can't yet stop. All right. Okay, well, hopefully you can stop someday. Bismarcky, I have lots of HHIS. Just keep taking the distributions every month. Yeah, they have pretty good distributions, that's for sure. All right, Chuck, your thoughts on the new Evolve's Easy ETF? They sell cover calls on 50% of the portfolio. Which other ETF can I pair with Easy to reduce the cover call exposure? All right. Oh boy. Yeah, that's right. Easy is now out. Let's take a look here. All right, let's go Easy ETF. All right. Well, here's Evolve. There we go. All right. So I'll pull up the Evolve right now because yeah, it started trading on the 12th, so on Thursday. So here we go. Good old Easy. So obviously, obviously it hasn't had a good beginning because, the markets were plunging since they came out. So, and you can see right here, the NAV is down 1.41 because the underlying assets are pretty much down. But here's the interesting thing here. So they're holding, they're holding three things. So here we've got the U.S. Equity Ultra Yield ETF. So this is Biggie. And then here's the Canadian one. So this is Biggie, and this is Canny, and this is Inty. So there's your breakdown on this one. So those are the three that they're holding. Now, unfortunately, all three of those have been a little bit on the struggling side. It's actually interesting. The one ultra yield that's doing okay is Sexy, and they're not in this list. But yeah, they're going to gain. Well, I mean, through Canny, they will gain a good amount of exposure to the banks. In fact, Canny has quite a few banks in it. But yeah, so we now have a clear weight, and we also have the percentages. So right now, almost half, so 44.9% is going to be your U.S. exposure, and then 30% Canadian, 25% international. So I like this. I just would like to see these ETFs doing a little better. And right now, it's really unfair, I guess, to sort of judge how things have been doing in the last 6 months because, yeah, the market hasn't been great. But I have a feeling that this, here right now, they're sitting at what? 24.65. So they probably launched around 25. So they're probably down about 35 cents, I would guess. I mean, we could actually look. We can actually look. Hopefully we can look. All right, let's pull this back up. If it's loading a white page, all right, easy. Here we go. Oh, it's down even more than what it's showing on their website. So down about 60 cents. And here you go. So it opened right here at $25.10. So yeah, well, there was a little bit of hype. At one point it was up to, oh no, actually it didn't. Because even here it went down immediately. So even though it opened at 25.10, it fell right away down to 24. So it fell immediately. So it never quite got back to where it's at. We'll have to see what this looks like when the market gets a little better. Like so far, I've not been super impressed with these ultra yield lines at all. But I'm, like I always say, we're at the beginning of the race. They got off to a rough start. Maybe they can retool them, and they probably will. They're pretty smart over there at Evolve. So, but right now, I have no desire to jump in on easy at this moment. Like 0% desire. All right. Let's see. Moonlight says stop drip on it. Stop drip on it on Wealthsimple. I want to relocate the dividends. There we go. Hey, I got gas for her. 152.90 at Ultramars, whereas everyone else was at 159.90. Crazy how much differences there are on gas prices depending on the gas station. Wow. Yeah. Well, depending on where you are, like some provinces, they've got it all regulated. So like I think the Maritimes, it's regulated, which is good because then they can only change it at certain times unless they do an emergency change, but they usually let you know. So you normally have an idea what the price of gas will be tomorrow, and in some of the regulated provinces like that, which is good because then if it's going to be higher, to fill up that night before, and not wait till tomorrow. Or if it's going to be lower, you just wait till tomorrow. Brokers charged 3% to buy stocks back then. Oh boy, yeah. Keith Creel is CEO of CP, turned the company around. All right, and Guy says, hi, Candace, you should consider CCOE or CCHI. Great Cameco covered call ETF. Yes. So I like Cameco, and obviously I do like, these are not bad. And I'm very bullish on uranium when it comes to long term. And you guys know this. I've been talking about uranium for a long time. So, yeah, I mean, I've got, like right now, I have exposure to uranium mostly through HHIS. But if I was looking to get into one of the single share ones, CCOE would be a good one, or maybe even add some more exposure through the 9.1 as well. But let's see. What do you think about Go Easy after the drop by 60 to 70%? Well, like I said before, I've always felt that Go Easy, I felt like it's predatory lending. I have not been a fan of the company. So watching them drop kind of brought a little bit of joy, other than the fact that, I don't like the fact that, there was investors that certainly got hurt. That kind of sucks, but it's not surprising. Sometimes if you don't run a business with ethics, sometimes it does turn around and bite you in the butt. It's a company I wouldn't get in. Even right now, like, even though I think they'll probably survive this, I still won't get in. I won't even touch them with a 10-foot pole, to be honest. Just hold CCO. Yeah, that's another option as well. TA. Air Canada has faced difficulties several times in the past, and each time the federal government stepped in with loan guarantees. The U.S. government did the same when GM was in trouble. Yeah, no, there's no chance. There's 0% chance that Air Canada would ever go under. If Air Canada ever did go under, there would be bigger problems than that for sure. Lowering of corporate tax turns companies around. That certainly can help. You did a video on VDY and HDIV for retirement. What are your thoughts on XEI? So I do like XEI. Actually, we had XEI up a little bit earlier. So that's basically, it's an iShares. It's kind of like VDY, but by iShares. I think it's a really good option. Now, mind you, with XEI, and here, let's actually pull it back up again. There we go. All right. So one of the things is with iShares, you're not getting much income out of it, right? So this is going to be your growth, 3.924%. But you are getting, you're getting some good growth. So you are getting a lot of value from it, and your total return is going to be excellent. It's going to be excellent for sure. So if you have a retirement portfolio and you want exposure to XEI, I kind of got an idea what I would be doing with XEI. It comes down to a couple of things. First of all, if you have an RRSP, that's a great place for XEI. Because here's the thing, in retirement, and this is if you're an income investor. So if you're an income investor in retirement, you want your income stocks in your TFSA, and you also want them in your, in your cash account. But one place you don't really want income stocks, for the most part, is your RRSP, because you're getting no benefit from the income. You're not getting paid. It's just going back into your RRSP, and it's all 100% taxable. So when it comes to your RRSP, if you're managing that portfolio, you want total return. Total return, so a lot of times a lot of growth. So things like XEI, VDY as well are both really good for that fund. Even HDIV is fine because you are getting a good total return. But the last thing you would want is something like UTS. UTS is not a good ETF for your RRSP because, you're only getting the dividend. So, when you look at it total return wise, it's a great income stock or a great income ETF, but it's not a great total return ETF. So then you're wasting, you're kind of wasting your growth potential at that point. So the whole object of that RRSP that while you have it is obviously, if you're going to be pulling out of it later in retirement, you want to grow it to the best of your ability, or if you're also, even though it's not the best thing to leave to somebody because of the tax ramifications, so you end up paying higher taxes on it unless you're leaving it to your spouse. But if you're leaving it to your kids, they're going to pay basically at your full marginal rate. They're going to pay that in taxes. That'll be taxed onto it. So it's not the best place, but if you've already got a lot in there, right? Sometimes, at least working with what you already have in there, because there's reasons for having a lot in your RRSP. So for one, tax deference, obviously, if you had years where you were making a ton of money and you didn't want to pay the taxes at that high rate, obviously putting it into your RRSP makes a lot of sense. Or if you were holding really high dividend US stuff. Well, you don't, that's one way that you're not going to pay those withholding taxes on it. So that's another thing. The other big use for your RRSP is if you had a job that did matching. So if, for example, they said, we'll match your RRSP contribution up to a certain amount each month. Well, you obviously want to hit that amount every single time because that's basically 100% return on your investment right there. So yeah, those are a couple. So that's what the the RRSP is for. Your TFSA is your most important though. It is, it does all of the heavy lifting. You get it, and also when you die, it gets, you can pass that one on without, without huge tax implications. So, all right, now Rory. CP train operations were changed after Fred Green left. Competition was always faster and sleeker with CN at the time. Well, oil is up at the moment. Brent at 105. Oh, we should be able to see that now. Let's take a gander here. Where am I at? Right here. All right, let's see here. Oh no, look at this. It's not updating. Well, WTI is, but Brent's not updating. But WTI right now, it's moving up. So, all right. Oh, it's still saying that Brent is closed. That's probably why. But yeah, I imagine in the futures though it's up. But right now we are seeing some real time on WTI, and it's moving. It's been moving up. So, well, it moved up. Now it's it's in a red candle, but there was a little gap there, so it's up. All right. Copper's still red. Yeah, what can I say? What can I say? All right, guys, we got about 20 minutes left. So if you got your last minute questions, get them together, get them on in here so that we can. And I'm actually funny. It's funny. It's not dark outside yet. It's like 6:10 here, and it's not dark. So what can I say? All right. Let's see. When you said 50-50 or 60-40 in HDIV and VDY comparison video, did you mean it in terms of money value wise or number of share wise? As the price is very different for both. We're talking money wise. Yeah, not the number of shares. So yeah, and I will point out with that comparison as well. I'll mention this one more time because I forgot to put it in the video. I always normally try to remember to put it in. The 1 year date that we were looking at was from March 10th market open on 2025 to March 10th market open 2026. So yeah, but it was just basically a single split. So yeah. And that was kind of a different thing. I just thought it would be kind of neat just to sort of look at it that way and sort of look at how you kind of move where you're going depending on how you do it. I mean, honestly, if for me, I like the 50-50 split in a case like that if I want to balance those out. But here's the reality. HDIV I think does really, really well. Like there's many places even if I had done this a week later with that data, HDIV might have actually moved up because HDIV has moved above VDY many, many times on that list. And I think Adriano popped into my comments to point out that if you looked at it from the inception date for HDIV, that HDIV was ahead. I didn't do that math, so I can't guarantee that is accurate. But I mean, I don't see him coming in and lying about it. But let's see. What are your thoughts on TELUS? Have held it for years. I mean, I like our telecommunications. I mean, there's a few things. Actually, one thing that we may see is we may actually see a little bit of a pullback in the telecoms. Now, I'll tell you why. So the CRTC has just announced that they are wheeling back. First, not wheeling back. They're getting rid of a lot of their fees. So, for example, if you cancel your account, there used to be a fee. If you sign up for an account, there was a fee. In fact, in some companies, there was a fee for every new device that you added to your account. Crazy. So those fees are going away. But that's a lot of money that they make. So they make a lot of money off that. So that does impact their cash flow a little bit. So we could see once this goes live, and I don't know the exact date. The article I read about it didn't really say exactly when this was live, only that they were doing it. But once that goes live, that could cause a little bit of a pullback because they are going to lose a little bit of revenue because of that. But I know as a phone user, I like that plan. I do like it. I'm okay with that. But outside of that, so TELUS and Bell have both been sort of doubling down on AI data centers. So if AI does well, that could benefit both of them. Rogers has been kind of doubling down on sports. I think sports will be steady. Everybody, people seem to like sports. So yeah, it could be interesting either way. I think investor-wise, I would temper my expectations for a lot of movement to the upside with any one of the three, TELUS, Bell, or Rogers. I think they'll have a positive year, maybe, depending on this war. You know what? I actually want to take a look. I have not really looked at how. We'll go to TELUS. I have not really looked at how TELUS has done with this whole war thing. Okay, let's see here. Let's just go to, let's go to the last 1 month. All right, that's not good enough. All right, yeah, so they're down a little bit. They're down a little bit because they had been doing okay. But you know what? You can't blame this all on the war either because they began falling here. They began falling here quite literally last summer. And so they've been down. Oh boy. Yeah. Well, actually, yeah, this part here, I think this here is, yeah. I was trying to think here. I was thinking towards the end of the year. I was talking about what I was thinking they're going to do this year, and that's what they started to do. They started to recover from this. But then, yeah, they're still down a little bit. So it's going to be a rough hold. Perlovia, I think it'll be a rough hold on these, whether it be TELUS, Bell, or Rogers. I think it's going to be a rough hold. But I like them overall for the long term. But right now, I don't know. This is probably, I mean, it's probably not a bad place to dollar cost average. If you're holding them for the long term, then I think, yeah, if you're dollar cost averaging, I think you're going to be fine. All right, let's see. Moonlight says one of RBC's Canadian indexes pulled out of TELUS and reallocated to Bell last week. Oh, interesting. That is interesting. Yeah, I mean, but I don't know why. I don't know why. Oh, here we go. Martin has the answer. TELUS announced, oh, I remember seeing this. I didn't look into it, but I remember seeing this. Yeah, TELUS announced a data breach for someone who's in the managed cybersecurity game. Not good. So that's, yeah, that's not good. And sometimes, I don't know. Right now my phone is with Rogers, but I don't like Rogers, but at least as far as I know, they haven't had any security breaches yet. But security is going to be one of those things that becomes really, really front and center over the next 10 years. And that's one of the reasons that I'm very bullish on BlackBerry, for the simple reason that they're making waves within the whole quantum, within the quantum security. And I think that's going to be big. So, in a way, you could almost call BlackBerry a speculation, but it's an educated speculation. Let's see. Stumer says, I love TELUS as a user, but in the last 10 years, I lost money on TELUS, Bell, and AT&T. I'm only holding them in ETFs now. Yeah, there's a great way to get exposure. So somebody else can take the brunt of it for you, for sure. Absolutely. Oh, did we get to 70? Because you guys know I love to get to 70 likes. So I'm going to take a gander. We'll see. It's doing its thing. Oh, we did? Oh, we got to 81. Oh, gosh, you guys rock. All right. Love it. All right. Let's see here. Thanks, fellow investors. Got my answer. That's a nice thing. That's one of the things I like about the chat here, guys, is that, it's a great place to come in, sound off a little bit. I don't know all the answers, but there's always usually somebody in the chat who does. So that's always a good thing. And that's why it's one of the reasons that I bug you guys about the like button too, because the more people we get in here, the more people, the better chances if you guys stump me with something, we got somebody who has that answer. So I like that. I like that quite a bit. All right. All right, guys. It looks like things are slowing down a little bit. That's fine. So I'll go big screen for now. We're not quite at the 2.5 hours, but we don't have to get there. Okay. Well, maybe we do because here comes Cochrane. What do you think of C-Day? I do like C-Day. I do like C-Day quite a bit. So one of the things with C-Day is that, and this is part of that Hamilton. So this is their Daymax line. So they have, they're kind of like day trading on this account. So they're doing 0 DTE, so 0 days to expiry on these. And they have done, like C-Day has actually done pretty good. Like, here, let me pull up C-Day. Here we go. All right. Now, when we look at them over the last year, so since they released, now this here, one of the things that they're actually holding the champions. So Hamilton has their champion lines. So that's what they're holding. Now, yeah, this looks kind of scary, this last little drop, but that's what the Canadian market did. Like if the Canadian market drops and you're holding a Canadian ETF, of course it's going to drop. So that's but look at this. Look how this has been impressive growth. So, and here's the beautiful thing with something like C-Day is they've been, you are still getting twice a month dividends with this one. It's doing well. And, it's kind of, It's kind of that model that I wish Canny would look at and say, okay, we can make income and still do well. So I know I'm a little rough on Canny. I'm hoping Canny turns around in the second half of the year. Perlovia says, with Carney going wild on defense issues, any stocks that interest you guys? So as I've said, MDA Space is one I'm certainly going to watch this year. So I did put that on my watch list for the year at the beginning. And we, of course, at the end of the year, will review my watch list and we'll see how I did. So I got MDA Space on that list. I also have Algonquins on that list too. And, you know, they might be the one that doesn't hit, but we'll see. Well, I have fun doing it. I certainly have a lot of good fun with it. All right. Oh, we're big screen. I was going to say. Oh, I did it again. Guys, we were big screen while I was trying to show you guys this. This is Canny. This is Canny. So, like I said, this is that big drop I was talking, but this is just the way the market's been in March. But, well, heck, this big drop here is from, yeah, basically the end of February, right when the war started. Here's the war right there. Bang. So not great, not great. But yeah, this has been doing fantastic right up until the war. All right. Brian says, good evening, everyone. I went out to get buns for my lunch tomorrow. 103 later, $103 for buns? What kind of buns are they? I think you bought other stuff there, Brian. You got to have bought more. Sturmel says, EIF is rather related to airspace, but it goes up with increase in defense budget. EIF. All right, let's take a look here. EIF. Here we go. Exchange Income Corporation. All right, interesting. I have not looked at these guys before. Oh yeah, this is not bad. This is not bad at all. I like it. All right, and let's just see here. Diversified acquisition focuses on aerospace, aviation, and manufacturing. That's it. Yeah. Also, yeah. Well, the manufacturing might be, they're kind of lagging a little bit because of tariffs, but aerospace and aviation, definitely a huge hit for sure. Brian says, yes, I found all the sale items. All right. Nice. Nice. Yeah, nothing wrong with that. But, you know, sometimes it's hard. You go into a store and, you know, you go in to buy one thing, next thing you know, there's an associate coming up to you with a, here, can you use the shopping cart? You have too many things in your arms. Kelly, let's see, a lot of that defense spending is going to infrastructure. I'll be looking at Bird and whatever companies build roads, then see who is mining up there. So yeah, Bird. Oh, Bird. Bird has been one of my little superstars. So Bird, BDT. So yeah, looking at Bird, I mean, look at this. They were up again. So they had earnings. Their earnings were pretty good. 3.776, although they missed on revenue, but nonetheless, there was a lot of good stuff in their earnings call. But let's just take a look in the last year. You can sort of see, yeah, there's been a couple of down points, but for the most part, look at this. We look at the last 3 years, and you can really see what Bird has been doing. They're flying. They're flapping pretty hard. And they've made a lot of good acquisitions. So they did one of the areas they were weak on was marine construction, and they had they this year, actually, well, not this year, but last year, they acquired a company that does marine construction so that they could sort of basically make themselves really, really, really indispensable when it comes to finding the best way to get some of these infrastructure plans and projects that are coming down the pipe. So they're in good shape. Plus, they also have been very good at navigating government contracts. So that helps as well. Let's see, Brian, I didn't help that I went on an empty. Oh, never go shopping on an empty stomach. Nope, you end up making bad decisions. EIF is headquartered in Winnipeg. Moonlight, how did you find Bird? What a tweet. Yeah, Bird is the word. EIF has been great for me. Bird, so I found Bird actually researching for videos. So a lot of times when I used to do I used to do a list video every week. Now, now we're not as, I can do like 3 or 4 different things. So But I used to do a list video every week, and so I would, use screeners like crazy and put in different criteria that I was looking for, and dig through some of the results. And that's how I found Bird initially. And I was like looking at it, I'm like, oh my God, they have really good fundamentals. Look at this. This is going to be a stock that explodes. And and I think I found them about, I don't know, 2 years ago or so. And yeah, they've been absolutely. So another one I found that way as well is the Hammond companies, and they've also been pretty good. Like if you look at Hammond Power Solutions, HPS right here, .A. All right, and let's take a look at them over the last 3 years. Same general idea. Like they went from $38 to $183. And it's funny, I discovered them, and I was telling people about them back here, and by the time they got up here, people were like, oh yeah, this is a great company. And then this happened, and they're like, oh no, this was a bad call. But they turned around, they're right back up, because this is a company that does a lot of the transformers and things that they do are huge when it comes to electrical grids and it comes to AI data centers. And and this is just HPS. They also have another company in that same line, HMM.A. So this here is your Hammond Manufacturing. And they are, let's pull up the 3-year on them. So they've had a more of a rockier road, but I still like them. Like I think this is going to be, I think they're going to be huge, because a lot of the stuff that they build, so a lot of the stuff that HPS, so Hammond Power needs, these guys build. They're owned by the same two father-son team. And although I don't know if the dad might be, I don't know if the dad is still working. It might just be the sons now doing it. But there's a lot of potential here for this company, and I think they will explode. So I hold them in the challenge, and I have no problem, no qualms holding them at all. So I do like Hammond Manufacturing as well. All right, let's see. Bird is the word, EIF. Let's see. I know 2 people in the late 70s that had worked for Bird. Nice. Thoughts on HHIS and the RSP? The distribution is pretty high. Well, it comes out of total return, and that's kind of the thing. So if it's in your RRSP, you just want the highest total return. If it happens to be, if it happens to have high dividends but has a really high total return, there's nothing wrong with that. But if it's, if you're getting something that's giving you a 15% dividend, but its total return is like maybe 15 or maybe it's only 16 or 17%, it's not as good as something that has a smaller dividend but a lot of growth and is giving you a 25% total return. So, because you can't utilize that income. You can't utilize it in your RRSP. Sure, you could pull it out, but then it's generated as income. There is that part of it as well. All right. Well, guys, we actually we made it. We are there. We have reached our 2.5-hour mark. I love it. This is one of the fun things. Wait a minute. Brian says, if you are soon converting to an RIFF, then the dividends help you keep your capital. Yes, okay, there is that. But once again, and this is kind of one of those things, keep in mind, when you die, you are going to get taxed at your marginal rate. So sometimes it's not a bad idea to let that capital start sort of moving out for sure. But, RRSP meltdown, that's a topic for another another live stream for sure. Perlovia says, great day to all for tomorrow. Bye. That's a great one to end it on. We'll end it on Perlovia. Guys, now before I do go, I do have 2 things I wanted to say to you guys before I go, and that is bye-bye.